What's up, guys? Welcome back to DCA. Tonight, what we're going to do is talk about Ethereum and its relationship to Bitcoin, specifically when Bitcoin is above or below the 20-week moving average. Now, I bring this up in particular because you can see that Bitcoin currently is sitting at 58,000. I know a lot of people are nervous about this, and I could see a lot of people starting to panic sell, and I'm just trying to put some things in perspective. I'm not saying that Bitcoin won't go much lower. I just want to demonstrate how there is a historical precedent for this, and how important Bitcoin holding the 20-week moving average will be to the market cycle. So we're on this long-term trend line, and the green line is the 20-week moving average. So notice that we've come down and tested this white trend line multiple times now, and coincidentally, or perhaps not coincidentally, the 20-week moving average and this long-term trend line are at the exact same place, right at around $49,000. Now, Bitcoin is heading down towards this line, and I've said multiple times, if we go back to prior market cycles in 2017, for instance, we needed to test the 20-week moving average numerous times during the course of the market cycle, each time resulting in 25 to 30 to 40% correction. Okay. So if you would have sold, panic sold at any of these points, you would have missed out on Bitcoin, for instance, here going from 700 up to $20,000. So this is a natural part of a market cycle. I think coming down and testing this 20-week is actually very healthy. In fact, this was not very healthy, what happened, following October. So we basically tested the 20-week in September and October, and then ran well above it until we crashed through in May. So we went 7 months or so without even getting near the 20-week moving average. Coming down and testing it multiple times, I think, is a much healthier way to go about the market cycle. And if we do something like this again and don't ever come down to the 20-week, you're never going to get to these ultra high valuations people want to see for Bitcoin, because as soon as it does come down to the 20-week, it's just going to crash through. So a slow and steady test of the 20-week as we move up would be a much healthier way to go about the market. So with that said, let's move over to the charts here. So the first thing what we're going to look at is Ethereum, and we're looking at Ethereum when Bitcoin is above and below the 20-week moving average. And I just want to show how important it is. I can't overstate how important Bitcoin staying above the 20-week moving average is. So in red is when Bitcoin is so this is the price of Ethereum, okay? Just to sort of orient you as to what we're looking at. When Bitcoin is above the 20-week moving average, this is red for the Ethereum price. When Bitcoin is below the 20-week moving average, it's blue. And you can just easily see here that when Bitcoin is holding this 20-week moving average, Ethereum goes on the move, okay? And it does so in a big way. Here we're starting down at 10 to the 0, sort of at the start of 2016. And then, by time the market cycle's over, we're approaching $1,200 or so, $1,400. So $1 up to $1,200 or $1,300 or so. Then as soon as Bitcoin drops below, and we can even zoom in and see this, as soon as Bitcoin drops below this 20-week moving average, denoted in blue, the price of Ethereum plummets. So from about $1,000, 10 to the third, all the way down to less than $100, okay? We go on a little run once Bitcoin gets above the 20-week for a short amount of time in early 2019, and then aren't able to hold the 20-week, and we just sort of move sideways for a while. And then, we're above and below the 20-week, back and forth. But while we're doing that, just sort of having this sideways movement with Bitcoin, Ethereum also isn't really going anywhere. Then when we get above in April of 2020, that's when Ethereum just goes crazy. So we go from, again, we're sitting at about $100 to $200 here, up to where we got to at 40, around 4,400 bucks. So I guess the closing price was closer to 4,200. You can see when we fell below the 20 week again, the price of Ethereum crashed down to $1,700. And once we got above, yet again, we went on the move, and our highest close was around $4,800. Okay. So Bitcoin being above its 20-week moving average is critical for Ethereum, and you can extrapolate this on to all of the altcoins. Okay. Now let's take a look at Bitcoin above and below its 20-week moving average. Okay. But this time we're looking at Ethereum to Bitcoin. Okay. So instead of Ethereum USD, which we just looked at, we're looking at ETH BTC now. And again, it's something similar. When Bitcoin gets above its 20-week moving average, Ethereum gains with relation to Bitcoin. Okay, so you can see Ethereum here, it does have corrections. Unfortunately, I have a feeling a lot of people will do things like buy it up here, and then during the corrections, they'll sell it. But, overall, there are corrections, but it tends to gain with respect to Bitcoin when Bitcoin is above its 20-week moving average. Then when it falls below, so here we fall below the 20-week, and what does Ethereum do? It bleeds, as do all the altcoins. Bitcoin holds up better than everything else. So when we start to go into a bear market, everything bleeds with respect to Bitcoin. And a bear market is typically, or can be defined as Bitcoin being below its 20-week moving average. So when it's below, Ethereum's bleeding. This is that short amount of time that we got above the 20-week. But even then, this, you could sort of tell that this wasn't a true bull rally, because Ethereum kept bleeding with respect to Bitcoin. Okay, so this is what we were just looking at, but here is the USD valuation of Ethereum. So ETHUSD, and this is ETH BTC. So you can see that even though we got above this 20-week for a short amount of time, or, it wasn't even that short of amount of time. It was really, we went from March all the way out until September. So, a fair amount of time, but Ethereum continued to bleed with respect to Bitcoin, in spite of the fact that its USD price was increasing. All right. So again, in a bear market, you're better off holding Bitcoin than you are altcoins in general. Now, obviously, there can always be exceptions, but I just keep trying to drive this point home, because I know a lot of people, especially new people, come into the market and they want to ignore Bitcoin. They want to ignore it because they want the big gains. But I'm here to tell you that, if you are holding too many altcoins, you're going to get absolutely annihilated when if we drop below this 20-week moving average. I mean, a lot of the best projects right now lost 95% plus of their value. Okay. Just keep this in perspective, guys. I feel like I'm trying to take up the crusade of, preventing people from getting wrecked. Just to continue on though, when Bitcoin then finally gets above this 20-week moving average and holds it as support, that's when Ethereum can then gain. So remember, this is ETH BTC. This is when it can start gaining with respect to Bitcoin. Now notice, so here we are in April of 2020. We do gain some with respect to Bitcoin, but we don't go parabolic until after Bitcoin had already reached close to $60,000 and started going sideways or correcting a little bit. And then, you can obviously see this is going to be May, when we crashed below the 20-week, Ethereum lost a lot of ground with respect to Bitcoin. And, obviously it varied as the rally started getting kicked off. Ethereum was able to gain some. Recall this was around $4,200. This is $4,800. Yet, and this is important, and this is what I keep saying, I feel like people will just have such a hard time with this. Ethereum had a higher valuation to Bitcoin back in May than it does now. And, even quite a bit better. Okay, guys, so this is the last thing I want to show. This is the price of Bitcoin in yellow over the 20-week moving average. All right, so it's basically saying when the yellow line comes down to this white line, this is Bitcoin touching the 20-week moving average. If you see us drop below, this white line, that means we went below the 20-week, and vice versa. If we come above, we went above. But you'll notice back in 2017, we come down and we touch this white line numerous times. So just, we're not even showing the whole market cycle here, but 1, 2, 3, 4, 5, 6, 7, and then, we sat right along the line all through March. Then this demonstrates here at the end of the market cycle, right here, when the price started to crash down, we went below the 20-week, and then it acted as resistance. All right. Now, one key thing I want to show here is, well, there's a couple things actually. First of all, we have held the 20-week here, which we have not done back, since September or October, like I said before. Now, the thing you'll note is Bitcoin reaching up towards this higher mark here at around 2.25. So this higher white line, this tends to be the catalyst for Ethereum to really get going. So this is ETHUSDT, and the color coded dimension is this. So as this goes higher, we approach red. And as this value goes lower, so in other words, Bitcoin falling below the 20-week, this turns blue. And you'll see every time that Ethereum has made a big move has been in the setting of Bitcoin getting well above its 20-week moving average. All right. So this would correspond to here, and that's when we make our big move. So Bitcoin goes from blue into the lighter color. Once we start to get into lighter colors, then we start to move. Then Bitcoin drops down into the bluer regions, and Ethereum sort of goes dormant. Then when Bitcoin gets hot and turns red, that's when Ethereum spikes up. Okay. When we fall below that 20-week, look what happens to Ethereum. All right. It just plummets. So, we saw the same exact thing in this cycle. We went from the darker blue regions into these hotter colors. So into green and then yellow and then eventually red. And then Ethereum takes off. So you can think of this as the fuel, the rocket fuel for Ethereum to go to the moon or whatever whatever you want to call it. Okay, now you saw that we started to get into some of these colors here, into some of these lighter colors, and that is when Ethereum started to move. But right now, I think we're doing what we've seen Bitcoin do multiple times back in 2017. So we get to this around 60% above the 20-week moving average and then come back and test the 20-week. We saw this numerous times in 2017. And I think that may be what's happening right now. So you can see anytime in the past that we've got up to this 60 level or so, anywhere from 60 up to around 80. If we weren't able to keep going, we would get rejected back down and come down to the 20-week. So, it happened here, 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 here. It's just happened so many times now. Even sort of, we didn't quite get there in August, but we got close and we got rejected and needed just a little more time. That's when we held the 20-week in September and October. And that was the actual catalyst to start the parabolic phase of the bull market. So this would be a very good thing, in my opinion, if we were able to come down to the 20-week again. If we come down to the 20-week again and hold it and the market continues, all other things considered, let's say, obviously if the stock market crashes, if, depending on how the Evergrande events in China play out, depending on how all those macro level events play out, obviously those could derail any crypto market cycle. But if we come down to the 20-week and hold, I think that's going to be the catalyst to send us into the next stages of the market cycle. Now, if we come and crash down and go below, personally, I believe that could be the, the nail in the coffin for the market cycle. I can't say that definitively. I guess it would all, it would depend on what else is happening around it. If the rest of the market is holding up, the equities markets, et cetera, are holding up. Maybe it will just be like we saw in May. But my feeling would be if we crash below the 20-week, the market cycle is likely over. I guess we'll have to see how that plays out, though. I won't say that definitively at this time because personally, I don't care if the market cycle continues or it ends now. I am invested in the market for whatever the market is doing at the time. My investment plan isn't on a, 2 or 3 year basis. I'm thinking 5 or 10 years down the road. So, if we need to reset now, sure, why not? And, if market continues heading up, fine, that's great too. I'm going to react accordingly no matter what's going on. So I think that's it for this one, guys. If you guys like this type of content, hit like and subscribe. Head over to the Telegram channel if you're interested in the DCA index models. These are models which, demonstrated that they are fairly decent at predicting, the market cycle tops, or at least can help you identify when the market cycle top may be approaching. If you guys are interested in those, you can sign up for them. I'm sending them out for free, whereas a lot of other channels are charging a lot of money for them. So that's it for this one, guys. Until next time, as usual, see ya.